I'm sorry, I woke you, babes. Hello, welcome to Canadian Money Talk. Let me know if you have. Oh, and gone. Eight says USA in a Hulk Hogan voice. Okay. Hello, welcome to Canadian Money Talk. Let me know if you have any questions about personal finance, investing in Canada. I can look up a few stocks for you. Strategy, financial independence, personal finance, all that good stuff. If I can help with anything, let me know. Happy New Year. Eight has a question. I hope it's better than the Hulk Hogan one, but go right ahead. If you're an American, I can look up American stocks for you. But our tax rules would be different in Canada than what you have. If anybody has any questions, personal finance, Canadian investing. Kickin' Chicken says hi. Hello, Kickin' Chicken. How can I help? Is everybody here for New Year's resolutions? I'm gonna be better with money. Kind of a generic resolution. Yeah, I'm financially independent. I'm at 51. I retired 5 years ago when I was 46 from an IT job. I easily live off the dividends from my portfolio. So I'm trying to help people get to the same place. Kickin' Chicken says, "What's your favorite food?" Well, I'm on the keto diet and have been, except when I was traveling in the Far East. I've been on it for close to 6 years actually. Um, so my favorite food is mostly a salad with cheese, probably. Protein would probably be salmon. If I wasn't on the keto diet, it would be probably sushi, which, you know, I haven't had for a while. Eight says it would make financial sense for the country of Canada to join, oh my God, the United States as a state, financially, especially for the good Canadian people. Yeah, I don't think so. Neither financially nor culturally. Remember, Americans are the only ones who want to be Americans. The rest of us, when we travel abroad, we put a we put a Canadian maple leaf on our backpacks and our hats. So yeah, we don't really want that. Um, I'm not sure if Trump was joking when he said that, but that's not going to happen. I'm sure Britain would have some to say about that since we're technically still British subjects. America influences the world, especially Canada. You say respectfully. I don't think America does that. I don't think most Americans know Canada exists, unfortunately. Um, like from an investing point of view, Canadians know about the Toronto Stock Exchange, and we know about the New York Stock Exchange, and we know about the Nasdaq. You talk to an American, it's all S&P 500, Nasdaq 100. They barely know that there's something north of them. Um, so America does influence the world. Um, Geography is always whatever whoever's closest gets the most influence. Um, like culturally, we get all of your TV shows and so on, whether we want them or not, because they're cheap. They've already been paid for by the audience in the US, and so they come up to Canada for next to nothing. So we were subjected to it. Um, the US does influence the world, whether whether positively or negatively is up for debate, and I'm an investing channel, so I do invest in the US. Um, not I'm not a big Trump fan. I don't know if anybody outside the US is. Um, every so often, I'm just like, geez, I can't believe those people voted for him again. Should I just sell all of my US stocks just because like that it just cannot go right if they're capable of doing that. But and this is as far as I want to delve into politics. Um, the reason why Trump won was inflation. That was it. I On a podcast I heard a statistic that out of the last 10 elections, 9 times it flipped to the other party. Obama was the only one who got 2 terms because he was amazing. Um, Otherwise, the people basically say, well, my life sucks. Look how expensive groceries are. Look how expensive gas is. It must be the current president that's doing something wrong. And then the small swing vote um, basically goes the other way, and they vote the other guy and thinking that they're going to improve everything and save them. And to everybody's surprise, they don't. Um, just one state in the US has a higher GDP than the entire Canada. Well, not any state. I'm assuming you're talking California, which has a higher population than Canada. Last time I checked, anyways. I can actually Google that since I'm up to date on the questions. Um, it's not something I can influence, so this is sort of a pointless discussion. But yeah, that's not going to happen. Um, you're California, Texas, many more. Okay. California population. Oh no, Canada, we're over 40 million. California's 39, so we're a little bit over California in population. Um, yeah, I'll take your word. It doesn't matter, right? It's the population that matters. So if you have a larger population, you have a higher GDP. What Canada is lacking, to turn the conversation back to investing in economics, is that our GDP per capita is not improving as fast as American. We're falling behind in productivity, unfortunately. Um, so we need to work on that. But yeah, we're next to the 500-pound gorilla. So yeah, you get to influence things, and a small part of your country is going to, whatever metric you want to use, is going to beat Canada because population wise we're a tenth of your size. Um, yeah. Notice Canadians are not trying to get into the US. So anyway, good political discussion. I try to avoid politics. I obviously have my opinions, but I don't get a vote. Not that that matters. Um, yeah. Any questions about investing? I'm happy. I'm happy to discuss. Canadian, preferably financial independence. In in Canadian dollars, I have a net worth of over 6 million, despite dressing like this. So I'm just trying to help people get to financial independence, whatever that looks for them, whatever their goals are. Okay, I think we've had enough of 8. Bye 8. Firefox, hello Firefox. Welcome. If I can help with anything about personal finance, investing, I'm happy to. Obviously, Canadian Money Talk, so my expertise is in Canada when it comes to taxes and so on, but I do invest in the US as well. Firefox says, I like your sweater. Well, it's a bit of a hoodie. My dog had a go at one of the ends, and I got a new puppy. She's sleeping, so I'm definitely not going to wake her because she's quite rambunctious otherwise. But I got a new puppy a month ago, and I just recently created, you can sort of see it in the corner here, a doggy door for her. And I managed to, while painting in the same sweater, the doggy door is quite useful for me not being woken up in the middle of the night to let her out, and I can now go grocery shopping without keeping my fingers crossed I don't find a present in the kitchen. She can make her way out now to bark at things. Anyways, that's my puppy. Her name is Goose. But yeah, if I can help with anything financial, personal finance, I'm not trying to sell anything. I'm just trying to help. Um, it's New Year's. I don't know if people do New Year's resolutions. I kind of find those a little bit silly, frankly. You should be doing whatever you're doing the year round. Um, so yeah, it's not just January. Um, but yeah, uh, if it prompts you to start taking your finances into hand, then cool. Better starting January 1st than not starting. But I kind of found secret to my success, and I don't think I've been particularly successful. I just worked in IT, which was stressful, but I made a lot of money, and I lived like you see me. Um, and so I invested and saved a lot, and that's what got me to financial independence. But I did nothing magical. I just did what I knew I had to do to not have to work anymore because I disliked it, and I stuck to it. So um, it's not just doing it January 1st. You have to keep doing it the whole year and then multiple years, and then eventually you get to where you want to go. Um, Ray, hey, first financial question. Thank you very much. Ray says, "What are your thoughts on covered call ETFs?" So I don't use them. I don't recommend them. So for everybody else, Ray obviously knows what they are, but covered calls are an option. Okay, where it's a contract. So the stock price is here, and you sell for money, a promise to sell the stock at this price. Okay, you own the stock. That's why it's called covered. And basically, if the stock stays here or goes down, and maybe stays a little bit below the price that you're promising, nobody will take you up on it, and the contract will expire worthless. But you sold it right up front for cash. Okay. Now the problem happens when it goes up past it's called the strike price, the promise price. If it goes up, the ETF, just like an individual, loses that stock, but at this price. So it misses out on this. Okay. So the benefit of a covered call ETF, exchange traded fund, it contains a basket of stocks that some or all of them, they sell these option contracts on. So the benefit is you get a very nice cash flow. Okay. Usually high single digits, some of them 12, 13, 14% dividend. It's not a dividend, but you get a yield on it. So for people who either very much dislike digging into their principal and hate selling a couple of shares in order to have money to live on or otherwise, they'll do this, and they'll get nice cash flow. In a down market, covered calls are actually not bad because your share prices are still going down, but now you're getting an extra 10%. So they kind of offset some or all of the downside. The only problem is nobody knows when there's going to be a down market. And so, you would be timing the market if you bought a covered call for that. I kind of not recommend, but if you're going to do a covered call, I usually think it's somebody who really hates their job and has a $500,000 in a portfolio, and they will say, okay, if I get 50 grand a year, I can live on that. So they will buy $500,000 worth of covered calls, and then they'll get this cash flow. They never have to dig into the 500,000, even though it's losing value thanks to inflation. So they do need to put a little extra every so often back into it. But that sort of works. The downside of these guys is that we are all here assuming an upward trending market. And going back to this, if the stock goes here, you're missing out on this. So covered call ETFs generally have very little, if any, upside because they're always losing the stock and they're missing out on the upside of an upward trending market. So if you get a nice run up, the covered call ETFs don't participate in that. So you'll miss out on the 20% years. But you will participate in the minus 10% years. It'll get offset by the cash flow, of course, as I said. So if you look over a longer period of time, and then you can find an ETF that doesn't have the covered call overlay, but it's the same underlying ETF, the ETF without the covered call overlay will outperform the covered call the covered call ETF, usually 1 or 2%. I've looked at it a few times now. I did a YouTube video about it, and then somebody was doing like a NASDAQ 100 covered call ETF, and so I could find a NASDAQ 100 ETF that didn't have the covered call overlay. And live, I'm like, yeah, this is getting, like I said, a couple of percent lower per year, right? So it's not a tragedy if you really like getting that cash flow and not having to sell a couple of shares. There's nothing wrong with selling a couple of shares, by the way, now and then whenever you need the money. Then covered calls are fine. Covered call ETFs are fine as long as you're aware that it is underperforming a little bit. Okay. Now, in a given year, if you happen to catch it, and you have a slow year, then the covered call ETF will do great. We'll beat the market. Um, but otherwise, yeah, I just generally like, I'm a long-term investor. I buy and hold. So I don't do I don't do the covered call ETFs. Um, Split share corporations, just to keep carrying it further, are much worse. They usually pay double digits and so on, but they're just financial engineering. Quite a few of them basically get delisted and just go away. There are some that have been around for a very long time, so I wouldn't expect anything bad to happen there, but a lot of them don't survive. Um, and those, like, I categorically say, don't do those. No, the covered call ETFs are fine. I do a little bit of options selling. I don't want to say trading. I mostly sell puts in order to accumulate additional stocks and make a little extra cash. And uh, that all goes on a margin account. And then when I end up with some margin debt, then I sell covered calls, or I do the wheel strategy. So I do them myself, but I haven't bought, but very rarely, like 10% of the time. Um, but I haven't bought a covered call ETF. Brain One says, "What do you think of Nvidia in 2025?" I think Nvidia is a good company. There's no doubt there. I just think they're overpriced. Nvidia. I'm a value investor. I like things that pay dividends and have a reasonable PE, price to earnings. And Nvidia is at 52. I owned Nvidia a while back, and then, like, when I had a PE, I think it was in the 20s or 30s. It went up 400% for me, and I sold it. I didn't have all that much anyways. It wasn't it wasn't life changing. The PE is showing us 52, 53, so that is a little bit too rich for my blood. Um, I I kind of look at artificial intelligence as sort of what the internet was back in my day. When all the dot-com stocks came out, and everybody got really excited. And so Nvidia isn't like a dot-com stock. They actually make money. They're profitable. They're all good. They're not a meme stock by any stretch. They are a quality company. It's just the expectations on them are still really high. And for me, I don't think artificial intelligence has really proven itself. That's why I'm talking about the dot-com, because it's just I don't think it's quite there yet. So the companies that made the money are the ones that are maybe creating the software, definitely the ones creating the hardware. By the way, speaking of hardware, I own Taiwan Semiconductors because of the political risk that Taiwan is going to get invaded by China. Taiwan Semiconductors have a reasonable PE compared to Nvidia, so I still own them. But yeah, my point is the people that haven't made money yet are the actual end users. Okay, I've had a very obviously using free versions, but I've had a very mixed um, experience with artificial intelligence. Like, to me, as far as I can tell, it's a user-friendly interface, both for input and for output. And then there's a search, which we've had search for 20 years plus. Um, my problem is that you have to double check everything. I've had it try to write me code, and I had to rewrite it. Like, it just um, it's hit and miss. And the thing is, the picks and shovels have made money on artificial intelligence. And note that Nvidia made money even on stupid things like the metaverse. You guys remember that, when people got all excited and started buying buying real estate in the metaverse? I wonder where it is now. Um, So Nvidia made money on that because their processors were doing that. The stupid Bitcoin mining, same thing. So they made money on all of that. It's the picks and shovels during the gold rush that make the money, and it's the prospectors that are hit and miss, and sometimes they don't come back. So, the Googles and the Amazons and the Microsofts, I own all of those. So they've made money from that. But ultimately, people are going to realize, yeah, this isn't improving my bottom line. Like it actually has to be useful for um, for the end users, and that part isn't there yet. And I would argue it's probably. I mean, the thing kind of broke about 2 years ago, and everybody thought, boom, it's just going to change our lives immediately. And I don't know why people think that. Like it happens all the time. That just people just get this is the next big thing, and they just pile in, and then like this stuff takes time, like even just to change people's minds, not just mine. Like I worked in IT, I'm familiar with how things work and how long things can take, uh, like training and onboarding and all of that stuff. So, um, like just what I'm reading and listening to, I haven't heard anybody say out of my team of 10 developers, I was able to let go six of them, and then the other four are able to have artificial intelligence uh, double their work. Like that isn't happening. Any code that artificial intelligence seems to provide is buggy and arguably could be rewritten from scratch faster. So I don't know. I don't know. Like summarizing things, maybe. I don't really know where it's adding value and where it's adding productivity. And so Nvidia had sold all of its to get back to Brain's um, question. Nvidia had sold all of its processors, but it has to continue to sell them. And like if companies basically say, well, yeah, okay, we bought the licenses and all that, but like people are sort of not warm and fuzzy on it. Like they're not going to sell very many more processors. So great company, overpriced. Arguably, the bigger question of artificial intelligence um, is still out there. Um, the whole quantum computing is another craze that came out since artificial intelligence. Like these new things come out all the time. We also had fission, where they were able to use a. I'm going off topic because there's no other questions, so feel free to ask anything about Canadian investing, personal finance, financial independence. Um, Happy New Year for New Year's resolutions, maybe. But anyways, it came out like they used a warehouse full of lasers uh, to create like electricity to light up a light bulb as a proof of concept that you can have fission, not fusion. Like nuclear reactors um, are different than what's been happening. So, anyways. Like these new things come out all the time, but they're not always investable and or will take decades. Brian says, I kind of disagree. I think AI is already all over the corporate environments. I only see growth. It's also useful to build the scaffolding of code. What do you like with respect to TSX stocks in 2025? Yeah, I mean, none of us can see the future, right? It could be 6 months, and people are going to say, hey, this is great. Remember when AI first came out, the the CEO had to say, we're implementing artificial intelligence. Like it was the buzzword. So they shelled out whatever couple of million, depends. They shelled out just so they could say during an earnings call, we're implementing artificial intelligence. We're using artificial intelligence. Like I hate to tell you, like chatbots and stuff like that, when I try to get a hold of somebody at Rogers or whomever, and like the chatbots are useless. Like I want I want to talk to a person because my question, like if it was Googleable, I would have Googled it. Um, so yeah, implement stuff like that, and like how many people is it saving to the company? So yeah, I don't know how much exposure you have to all that stuff. Like I said, I worked in IT. Um, the cloud stuff for Amazon, Microsoft was, I mean, this was 5 years ago now, but it's still up 30% year over year for most of these companies, the spending on cloud. So instead of having internal servers, um, both data and the applications are sitting somewhere on the cloud because of the fast internet access. You don't have to have anything in-house, and it's way cheaper. So that thing had definitely been around even 5 years ago, and it's still going. So like all these trends, all these next best thing come out, um, and then it takes a while for it to actually kick in, and some of them, like the metaverse, never do. Or the metaverse might start in 20 years when the hardware and all that stuff is there. Like, sorry to beat up on Meta. I don't own them, but I very well could. Um, like the metaverse, like when it came out, and I'm going to answer your question, Brain, very very soon. uh, like Facebook was having all sorts of HR issues. Like they were having all sorts of scandals where people were coming out and complaining about harassment and so on. And they just needed to say, hey, look over here, right? So they renamed themselves to Meta, and like it wasn't even half baked. Like they were still kneading the dough on that bread, to keep that metaphor going. Um, like it was just somebody saw Ready Player One and they're like, hey, this is really cool. I just like imagine the logistics of like even walking, like the sensors and um, internet connections and like all of that stuff. Like it just was not there. Now AI, I think it could be paradigm changing, but I'm not seeing it right now. Okay. Um, I don't know if it's in corporate environments. I try to find when the last bus of the day was going, and it told me 11:30 p.m. And I looked at the bus schedule, and there was another bus at 12:30. Now, sure, technically it's the next day, but for any regular human, it's the same day. So it should have said 12:30 a.m. The following day is the last bus of the day. Also, don't forget, a lot of this stuff isn't revolutionary. It's just algorithms. Um, it's like artificial intelligence to me is that it's able to do something that it wasn't programmed for, and to do a search isn't something it was not programmed for, right? Like if it was programmed to tell me what a light switch on and off does, and I presented it with a bank of three light switches, and it would extrapolate and say, okay, there's 8 combinations, and I want to find out what all of the 8 combinations do. I'd be like, okay, that's like sometime a few times it does something extraordinary, but like I recently moved to Edmonton from Vancouver, or a suburb of Vancouver, and I try to do research on different Canadian cities to move to, and I'm just like, what's the average temperature in all these different cities? And it gave me it gave me the same temperature for all the cities. So basically, it couldn't, for some reason, find average temperatures for all the different cities. So it went boop up to Canada. That's the average temperature for Canada. And it said, yeah, that's got to be fine for all these different cities. Like garbage. Like, like it's like I might as well have just done the Googling myself. It would have been faster and I wouldn't have risked that I got the wrong thing. So for me, AI isn't there. I don't know whether the paid corporate licenses are any better. I'd be shocked if they were. Um, so yeah, let me know. But like all the hardware's been sold. Everybody's got something. Everybody's got a license for the data center, and now it just needs to actually improve the productivity of the end users, and that's the part. Anyways, on to Brain's question. What do you like TSX stocks? I'll tell you, I've been sort of trying to get in on BCE a little bit. They've got a long road to go, so you may not want to take that chance. But what I do on a monthly basis, I'm actually doing it again. First Friday of every month, I sell mostly puts. As I said earlier, I sell puts and then a few covered calls. So I'll tell you what I sold puts on, which are expiring in early January or mid-January. So Northland Power, which is a renewable energy, mostly North Sea in Europe, wind farms. They've been just beaten up for a very long time. Like over time, we are eventually going to transition to clean energy. That was another thing where people think like it's just going to happen immediately, um, that we're just, yeah, oil's out and clean energy is in. And it's like, no, the things, like, we want them to, but things don't transition that quickly. So all um, renewable energy stuff just shot up on expectations, and then it's just been drifting down ever since then. So Northland Power's one, Telus is another. Algonquin, which is basically now just an energy utility. They're Canadian, but they're running in the US. They've just made some bad decisions about debt, and they've just been beaten up. So I kind of keep buying them on the way down because they're not going to go bankrupt. Um, Canadian Natural Resources was another one. TD, which I'm shocked that people thought that, the scandal is sort of the end. Like, like who cares? They're going to clean up their act, and I think they can buy a bank somewhere else, but they're not going to. They're going to clean up their act, and eventually the U.S. regulator is going to let them buy something in the U.S. By the way, in Canada, because we don't have the immigration's really slowed down, it is hard to get additional customers. So this is why BCE bought that US fiber company, Ziply, um, in order just trying to buy customers. It wasn't kind of the normal move. They should have just paid off their debt. But anyways, so BCE, I've sort of been buying on the way down and selling put options and getting put options, getting the stock. So BC is another one. TD I mentioned, Telus. Yeah, so those are sort of what I like on the TSX to answer Brain's question. Um, my biggest single holdings, single stock holdings. I own mutual funds as well. Don't yell at me. But actually, Manulife and Go Easy. I had been buying Manulife for years while they were range bound because they almost went bankrupt in 2008, and they kept paying the dividend, and they just had single digit PEs, and I just kept buying them and buying them, and finally, let's say a year ago, they finally broke out, and I'm like, yay! My patience has been rewarded. I really just want the dividends at this point, so I don't have to go back to work. But um, yeah. So Brain says TD might be the new Manulife in the doghouse for a while. Do you like NWH? North. Let me look. Is that a REIT? NWH. Northwest Healthcare. Oh, I look at this pretty much every week during the lives. By the way, I do this every 2 weeks on YouTube, and the alternating weeks is on TikTok. I start Wednesday, 6 Pacific, 9 Eastern. And I just hang out. The YouTube ones are way calmer. Like with TikTok, like I'll be 30 minutes behind in messages. So um, I recommend the YouTube ones. So they're not profitable, so that's a problem. So they, if memory serves, they own both the land and so international healthcare, real estate, infrastructure, Europe, Canada, Brazil, Australasia. I think they have positive cash flow though. Let me double check here. Yes, they do. Okay, so they're not profitable, but if you back out the depreciation, which are obviously significant, um, then at least they have positive cash flow. So they're not going to go bankrupt. Um, their yield is 8%, but that's mostly because they've dropped in share price. And they cut the dividend by the looks of it. Either that or the dividend. I don't own them. Either that or the dividend fluctuates depending on how much money they have available. So right now the annual dividend is 36 cents and their cash flow is 45 cents. So basically they're paying out everything that they they can, and they're borrowing for any additional acquisition. So their debt to equity is almost 2. I prefer under 1. With REITs and like utilities, they usually borrow for stuff. So it's sort of expected, still not warm and fuzzy with interest rates going down, depending, and I have no idea, depending on how that debt is financed, it might be helping them or it might not. Um, it wouldn't be one I would go out of my way for. They definitely pay a nice yield. They've come off from like 3-4 years ago from 12, $13. Now they're at 4. Um, to put my technical hat on, I they look like they're trending down. I would wait till they hit $4 because back in March, I guess I can say of last year now. Back in March, that's sort of when they bounced off. 393 is the 52-week low. So see if they bounce off of that. So I would wait a little bit more. If you love them, then buy a third of a position or something. Um, Healthcare theoretically would be evergreen, but like there's let's look at their income. Their sales are increasing year over year. No problem there. Um, it's only the last year ending December 2023. We're behind by a year, but only that year did they lose money. The previous years they were profitable. So let's look at 2024. Yeah, last 3 quarters sales are drifting down. So maybe vacancies, I'm guessing. Um, and all last 4 quarters have been losses. Yeah, like they need to fix that. Like there's no way a real estate company wouldn't be profitable, shouldn't be profitable. Yeah, it wouldn't be my favorite. If you like it, I mean, adding to it now, it looks like an opportunity. If it breaks through the $4, then, it could keep going for a while. Um, the few analysts that cover it think the fair value is $5.70, give or take, 5.69. So anyway, Brain, I hope that was useful. Bibby, hello. That's the name I recognize. Hello, all. Assume everybody filled up their TFSA. Well, everything was closed today. I'm planning on putting in $1,000 tomorrow, and in my Wealthsimple TFSA, and then on one promotion or another, the Wealthsimple made me set up an automated $500 transfer. That's back when TFSA was 6,000. So I just do 500 every month. I can't be bothered to fill out the forms to cancel it. And then I just buy whatever to bump me up to whatever the limit is. I buy that on January 2nd. So I'll be buying it. There's, I mean, if you have the money, put it in earlier. Don't do it over the year, because you miss out on a year of growth for the one that you put in December. But whatever, it's $500 a month. It's not gonna make or break me. So, and I'm still plowing money into emerging markets. Still my investing thesis, which has been going on for 10 plus years, and only recently did it sort of start coming to a little bit of a fruition. Prior to that, I use VEE, so was it Victor Echo Echo, which has had a nice run lately, but the previous time at best it's been flat. But I just sort of believe in the demographics in emerging markets driving growth, while the developed world is turning to technology to improve growth. And there's only so much. Micah says, "Can I get a shout out, please? It's my birthday." Happy birthday. I've heard this so many times before that you'll forgive me if I'm skeptical, but if you have a financial or investing question, preferably Canadian, that would be great. No, you haven't. Maybe not from you. From others, I have. Well, not lying, and I'm not your brother, so two wrongs there. Richard, thank God. Hi, what do you think of 2025 for high tech and semiconductors? Uh, I'm a long-term believer for technology. For 2025, that's a fairly short time frame as far as I'm concerned. I'm a long-term value investor. Um, Semiconductors, I think, are going to be useful at all times. Whether if you're asking about NVIDIA, whether that's going to continue on its tear, I'm not going to rehash, even though it might be different people now. I don't want to go over the artificial intelligence story, but I don't think it's quite there yet. I think all the hardware has been sold. We now need it to actually improve productivity of the end users, and I think that's still sort of missing. So NVIDIA for me is too expensive. I do own Taiwan Semiconductors because of the political risk of Chinese invasion. They're still a reasonable price, but otherwise I'm sure I would have. I owned NVIDIA, and it went up 400% for me, and I sold it because it got too expensive, and it continued to get more expensive, which is not what I invest in. So yeah, like if you said should I buy the NASDAQ 100, which is only about 50% technology, but let's say, then I'd be on board. If you're asking about ARC Resources and Kathy Wood, I would not, because that's speculative. Uh, but yeah, I don't know if, like, we actually need to see results, and we haven't yet. So that's my thing. Richard says Happy New Year and thank you. Yeah, Happy New Year to you as well. You're welcome for whatever value I was able to provide. Um, so yeah, like I don't want to. I wouldn't plow money into Nvidia. Um, I can't remember the name of the company that had their auditor quit. But I mean, that one sort of feels like an opportunity. I sort of um, bottom feed on stuff like that as well. I'm doing it more in BCE, but since we're talking technology, that one might be an opportunity, because it didn't sound like there was actually anything wrong with their products or anything. They just I I don't own them. I don't follow them, but it sounded like they just were trying to hide something, and I don't know why. It sounded like they were doing fairly well. Bibi says, do you put any value in buying something with margin for the ability to claim interest on taxes? I do use margin mostly for the selling of the put options, because I don't want to have the cash. So I will, so I will, like if I get the stock, then it gets bought with margin money, and then I start paying interest. I definitely claim the interest on taxes, because all of my stuff is dividend payers. By the way, to claim, just as an aside, but to claim interest on taxes, you have to be borrowing to invest. It has to be in a non-registered account. Apparently, you already get tax benefits with TFSA and RRSP, so you can't borrow to buy in there. All the RRSP loans in February, I don't know if people know that they can't. I'd be curious. And then number three, there has to be either cash flow or expectation of cash flow. So you can't borrow to buy gold. You can buy a property and have a time frame when you're going to build a house for a renter, or you can buy a dividend stock like I do. Anyway, I hope that was interesting. Um, so back when interest rates were low, back um, prior to COVID and during COVID, I definitely was willing to borrow and pay a couple of percentage points. Um, Usually using my HELOC, the margin for the brokerage I was using at the time didn't really have that lower rate, but the dividend usually more than covered it. Um, and any growth was a bonus, and the dividend got taxed preferentially while the interest got written off fully. So there were all sorts of benefits doing that. But I don't go out of my way. Like, I want to buy good stocks. And if I don't get an extra share, like, it's fine. I'm not going to go and borrow for it. It's just that if the puts, if I do get the shares, then that's fine. I hope I answered. I'm not quite sure if 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 I did. Richard says, yes, AI has made a start with infrastructure. They need to improve more and better training. They still limited because of copyright material they cannot access without a license. Yeah, I think we're on the same page there. Like, it's the picks and shovels that has made the money. The companies that are creating the AI code, I don't think are making a huge amount. I know cloud is still the biggest gainer for these companies, like 30% for a few of them, at least that I remember. 30% year over year growth in cloud revenue, right? And cloud is like, I stopped working in IT 5 years ago, and my last implementation was cloud. Um, So actually, pretty much to the day 5 years ago that I stopped in IT. Um, and then I don't know if it was even then if it was like a brand new thing. Prior to that, uh, cloud was maybe mostly for data, and then it became for applications as well. So yeah, I don't think AI is quite there yet. Like earlier, I compared it to kind of the dot com. Like, yeah, eventually Amazon started selling stuff online, but all the companies that put a dot com on the name on their name and said we're going to be selling cars and stuff online. And it's like, well, you don't have any sales, let alone profits. Like, what are we doing here? Um, so AI, I think, is sort of in that it's not going to be another metaverse, which I think is 20 years out at least before the technology catches up with the concept. Um, but AI, like it needs to improve productivity in the end user, and I think that's not happening yet. Um, I don't, Richard, maybe you know more than I don't know if there's a significant difference between what I access for free on a bunch of different platforms versus what you can when you pay for it and you have a license. So if you know, I'd be curious because, um, okay. And then Bibi, I'm up to date again. By the way, guys, I do this every second week on YouTube, and the alternating weeks are on TikTok. Wednesday, 6 p.m. Pacific, 9 Eastern is the start. I stay on as long as there's questions. Um, the YouTube one is way more pleasant for me because there's less people on TikTok. I'm usually 30 minutes behind in the questions, which isn't great for anybody. So um, please join on YouTube. Um, Baby says, I think my question is about margin borrowing makes sense for people also making a salary. Makes sense in your case not to not be as valuable. I mean, margin is about borrowing to invest, and it's a multiplier. It's leverage, right? You have, making this up. You have 100,000 in in stocks, which, assuming they're going upwards, you can get another 100,000 in a loan. So now you have $200,000 working for you, but you only had to provide 100,000. So if if the market returns 8% off of your 100,000, you're actually making 16%, right? You have 2 to 1 leverage. So as long as things work out and things go up, great, no problem. Um, if things go down, then the multiplier works to the downside as well. So it increases risk. And margin calls are no fun. I think my question about margin borrowing makes sense for people also making a salary. Yeah, or better yet, you have access to cash somewhere, let's say through a home equity line of credit or something else. So if the stock market takes a nosedive after you've maxed out your margin, you're able to feed additional cash without having to sell near the bottom, right? Um, yeah, if you're making a salary, you're covering yourself, right? Like I've been flying without a net forever. Um, Flying without a net. I think that was a circus metaphor on a trapeze or something. Working without a net. So if you have a salary, I mean, you can always, if you don't want the extra risk, just wait until you make the money and then buy the stock. It makes sense in your case to not be as valuable. Um, Yeah, I mean, your borrowings, but as long as the stock goes up, your net worth goes up still. Okay, anyways. Baby, if I didn't answer your question, please ask me again. I'm sorry. I'm not understanding. Richard says, I think I'm going to move much faster than oh, AI is going to move much faster than 20 years. Yeah, I said that about the metaverse. I think AI, I mean, I'm totally guessing, right? I'm not an expert and the experts are frequently wrong anyways, but like AI broke about 2 years ago. Uh, that's when sort of all of them started releasing stuff that had been working on for ages. Um, it's I mean, it'd be great, right? Just my personal experience with it has been tepid. I don't even want to say lukewarm. Like you have to check all the results. Whenever I ask it to write a code, it writes garbage that I have to rewrite. So like if I were a developer, like I haven't heard from a company and like Richard, I own Taiwan Semiconductors as well. So like I'm on your side, right? I sold off Nvidia. So and I own Google, Amazon, Microsoft. I own all of those. So I hope it all works out and improves my life. Um, I hope I get a robot to carry me upstairs when I can't make it up the stairs anymore, rather than having to get a lift. Um, all of that, I'm on board. Um, so it was the metaverse where like just the logistics and like sensors and all that stuff that would need to be in place for anything like Ready Player One, which is I'm sure that movie is where Meta got their idea to distract shareholders from all the problems they were having. And I mean, everybody got excited, and then nothing because you can't really implement it. All the people who bought real estate in the metaverse, God help them. Um, so yeah, like I need to see. As I said earlier, we had 10 developers. Now we have four, and those four know how to write the queries in order to produce write the queries for AI to produce code, and the code works first time. For me, that hasn't been the case. Like I've had multiple. Well, when I was traveling, I was in Singapore, where they famously take credit cards everywhere, and I wanted to go to a museum, and and I couldn't find on their website that they take credit cards. So I asked, "Do they take credit cards?" And AI said yes, because what it did, it couldn't find it on the museum website either, and it went up one level. It's like Singapore, yeah, they take credit cards everywhere, and it assumed the same thing for the museum. Museum did take credit cards, but I went blind, went there blind because I'm sure it made it up. Um, and it's funny when you challenge it, it's like, oh, sorry, like what the hell? Okay. Brain says, what do you think of VGG? VGG is Vanguard US Dividend Appreciation Index. Trades on the TSX though. Market cap weighted index of US companies that have increased their dividends 10 or consecutive years. Yeah. Um, the only thing is you're going to get the 15% withholding on. It doesn't show what the yield is. It's going to have some sort of a yield, but on my brokerage it doesn't have it. I mean, average annualized is 13.5% over 10 years, so not bad. It's had a nice trend upwards. Um, yeah, just whatever it's yielding, there's going to be 15% withholding in an RSP as well. TFSA definitely. Non-registered, you might get it back at tax time. I don't know. You might. And dividend growers is fine, right? It's decent companies that are able to increase the dividend. By the way, I just did a YouTube video where I kind of compared and contrasted growth versus value and, dividends instead of selling a few shares every so often. And people frequently say, Oh, people frequently say the fact that they're able to grow the dividend mm, shows that it's a solid company. Well, you could also look at earnings per share increasing, and that'll give you the same the same idea. You don't need something that pays dividend. In fact, arguably, and I argued in that YouTube video, why not let the company that you're trusting with your money already? Why not let the company keep its profits and invest them and get a better return on that investment than giving the money to you and you going to the pub. So anyway, so yeah, I don't think there's anything wrong with VGG um, if you like the US, right? The management fee is it's still passively managed, but the management fee is over 1/4%. You can get S&P 500, which is probably going to be similar. You can get it lower fee. So, but this concentrates on dividend payers, even though I can't see how much. Richard says, I know engineer is doing bad job because he depends too much on AI to solve engineering problem. I just keep on nodding it sometime. Okay, so you're working with it and you're in it. So I mean, you might know more than I. I just like from all the articles and the videos and so on that I watch, like it doesn't feel like it's revolutionary. Maybe an evolution, which is I threw out 5 years for AI to sort of really hit its stride. I just don't think it's going to wholesale change our lives in the next 6 months. Like that's just not going to happen, right? Um, like I don't know how many people would trust a self-driving robot in their home to take care of their kid and so on. Um, so Ready Player One was a good movie. It was a good movie. The problem was that somebody at Meta wanted to distract people from all the HR issues they were having and harassment and so on. They had multiple things sort of happen. Um, Plus Zuckerberg is still not as bad as Elon, but he's still a bit of an oddball. I guess he sort of have to be, maybe. I don't know. But they were having all sorts of issues, and the stock price just kept going down, and suddenly, poof, new vision, and they poured billions into it, and people got all excited and started buying real estate, and then eventually they're just like, and they quietly shut it down. I think they kind of laid off the whole division that was working on the metaverse. Like I get it. I just don't think the technology is there. Um, like I back 20 years ago, I could buy a CD, a compact disc, where I could walk through the Taj Mahal, right? Just virtual on the screen, turn left, turn right. That was 20 years ago. Let's make it a little bit more interactive, but it just sort of I every morning I listen to it's a 30-minute fidelity seminar, and uh, sometimes there's advertising their stuff, but usually you get a couple of tidbits out of it. And like on a weekly basis, they had somebody talking about the metaverse, and then suddenly they didn't, right? So like it's stuff like that. Like it's um, stuff that's not ready. I forget whether it was fusion. It was fusion, the nuclear fusion, where they had a warehouse full of lasers, and they were able to light up a light bulb with fusion, which they've been working on for decades. It's like, okay, proof of concept, good, good. Nuclear reactors are fission, where you have splitting of the atom. Fusion is when they're coming together, I believe. Um, so they were able to make it happen, And it's like, well, but it's not an energy source, right? And again, people got excited about it, and then it sort of went away. Like, and there's unfortunately companies that say they're working on this kind of stuff, and they just get investor dollars, and like you could see, I get a description on in the brokerage, and you can just see company like one by one, like they're hitting all of the, the latest craze. I'm just like, you people are just unethical, to put it mildly. Okay. Richard says, what's the next metaverse, I wonder? I, the whole quantum computing, which also has been around for years, it sounds like it might be sort of getting somewhere, sort of. Um, just whenever you have a company that is working on one of these crazes, are they profitable? That's all I need to know. Are they profitable? Um, if they're not, then whatever they're working on, why do you say it's so star spangled awesome if you can't make a profit at it? So, you know, Richard saw a Ready Player One as well. Yeah. Bibi says, my opinion currently AI is more user friendly documentation summarization. I agree. Like to me, it's a user friendly interface. Like you can write in regular language. You could, I mean, if the voice to text has been around for ages as well. Dragon, naturally speaking, I remember I had ages ago, uh, to dictate. So like you could now pretend like you're on Star Trek, and you could dictate natural language and it interprets it. So user-friendly input. Then it just does, as far as I know, it just does a Google. Like it's not thinking. It's just doing a search based on the parameters you gave it. If you give it crappy parameters, it's still going to give you crappy results. And even if you give it good parameters, and then it spits it out in a user-friendly fashion. So summarization, yeah, but it's just logical. It's like an algorithm. It's such a buzzword, AI. Like artificial intelligence to me is either like a human. Um, was it a Turing test where you have basically a door and you're slipping notes under the door, and if it's slipping notes back out, and if you can't tell whether it's a human or a computer, that is artificial intelligence. That is not what we're talking about, and never have been. Or that it basically is able to do something that it learns. And I mean, is the search learning? Like I wanted to come to some sort of a conclusion on its own that it wasn't programmed for, then that would be intelligence. If it's basically a user-friendly Google search, like, okay. Um, Richard says used to be 10 CDs for computer magazine 15 years ago. Yeah, yeah, fair enough. I still have DVDs. I'm currently playing a video game from 2006, which I bought for 4.99 around 2007 or 2008, and that came with a DVD. In order to make it work on my version of Windows, I downloaded it from, there's a website called Good Old Games, and you just get a file. You don't, like I think I could scrounge up a DVD reader and a burner today, but most people would probably have a tough time. Okay, off on a tangent. Richard says small modular reactor is the next energy thing, not fusion in my view. They're doing testing phase now. So the small, yeah, okay. So this was yet another thing people jumped on where Cameco had a PE in the hundreds. So data centers are really uh, dependent on AI sort of still doing that, right? So they're building data centers. I did a little bit of research. So they're using only 2% of the US energy. Depending on the size, it's like 10,000 to 80,000 homes. So not nothing. And the problem is utilities are not able to provide electricity reliably. So what they went to is small reactors, which is fair enough. There's a reactor technology has changed significantly since Chernobyl and even since Fukushima. So they're not going to do the same thing, excuse me, that happened there. But it still has a stigma. Depending on a country, some are still firing up coal reactors, and uh, natural gas is sort of the intermediary. Those turbines are also getting dusted off. But the whole thing with the nuclear reactors, that seems to be really contained to the data centers. So if the shine wears off of AI, data centers are going to go next, and then like nuclear isn't. It's not going to. It could very well be, but it's just not going to, just politically, because people still remember those problems, where half of Europe could have been irradiated. Um, So yeah, the as far as I know, the small modular reactors are only for data centers, which is a very small percentage of overall energy usage. Um, and it is all dependent on um, the continuation of the whole data center and AI thing. Uh, Cloud is also in data centers, but I think it's the AI thing. There's a difference between storage and then processing, right? Like I've walked into some rack server rooms in my day, cold, very cold. Um, and if there's a fire, you have 10 seconds to get out before the whole thing gets, whether it's foam or they like, basically you'll die if you're in there to smother the fire. So yeah, that's sort of an interesting one as well. What's I'm just out of curiosity, since I'm almost up to date. Cameco, what has happened? Nuclear, like yeah, it's coming off. PE is still 275 though. Um, Keep in mind, like nuclear, like it's a fairly small amount of garbage or whatever is left after the reactions. It's very controllable. It's not a bad thing. So people think it's terrible, right? But there's no emissions. It's it's not ideal, but it is a way. Like all they do is it's a small kind of garbage dump where they leave that stuff, and they encase it in, I'm gonna say, in water. Like it's not a huge thing, and it's not a huge amount of material. So anyway, Bibi says several decades of full fission adoption equals build extensive experience with nuclear. Um, yeah, it's depending on the country. It's Oh, sorry, I missed one. I did not see world making the jump direction to fusion. Yeah. Sorry. Um, I did not see the world making the jump directly to fusion without several decades of full fission adoption. Sadly, we seem to resist this obvious path of plentiful and cheap energy. Yeah, several decades of full fission adoption equals build extensive experience. Well, like we have experience with nuclear. Like even Canada had the CANDU reactors, and this was back in the 70s or something. Like Canada has unique technology. Um, it's just the thing that happened in Japan was only thanks to the earthquake and the tidal wave. That wouldn't have happened in any other way. And like Russian nuclear reactors in the 80s, I mean, let's not kid ourselves. So like the same thing won't happen again. It's just it's arguably either really dirty or it's completely clean. But it is reliable. Uh, like from what I've seen as far as the energy future, solar is number one. No moving parts. So as far as investment, it's mostly going into solar, with wind kind of being the second. Geothermal's in there as well. The only thing is those geothermal's consistent, but not wind and not solar. Obviously, nighttime or if the wind isn't blowing. So you need something that you can fire up when the night is coming. Natural gas is an option, obviously not renewable, but cleaner. Um, uh-oh, dog's awake. But it's cleaner and than coal. Coal is still a thing, by the way, which is mind-boggling, but it's still a thing. Uh, or so you can either do nuclear. Now, nuclear needs to be running. Like it takes a while depending on what state of shutdown a nuclear reactor is in. I read up on all of this. Um, like at the very least, it's 2 hours before you can fire up, and that sucker was pretty much ready to go. Um, with but like with natural gas, the turbines are running almost right away. So yeah, still no food or additional food. I do feed her. Um, so nuclear, I mean, it would take a little bit of planning or like to be constantly on standby. So natural gas works better. Nuclear would be an option. Geothermal obviously is localized. You can't. I do own Polaris Infrastructure. They do geothermal in South America. I can't remember the country. So I mean, there's other alternatives to kind of the supplementary energy. By the way, I worked for BC Hydro when I was in BC, and the whole west coast of North America is all interlinked. So if somebody has, because energy can't be stored, the batteries is really what they're working on now. There was something sodium based, but otherwise it's still just lithium based, and um, like it would be great to not have to have an alternate energy source. It would be good for solar and um, for solar and wind to charge up batteries that we could then access. Hi, I know. You have a good nap? Yeah. It would be good if if the stuff could be stored and we wouldn't have to switch over to something else, but we're not quite there yet. But if like one area has an abundance of energy, they're able to sell it down for us if we have in BC where they had hydro power, that's fairly consistent as well, like except when you have a drought. So yeah, the whole west coast of North America is interconnected. Okay, that was on you. Okay. Richard says, just to note, small modular reactors use different material and much better safety build. Yeah, no doubt the technology has improved, right? I mean, it's been 40 years since Chernobyl. It really seems big reactor, which are I think like even the big reactors are much better now. Um, and the Canadian CANDUs have been much safer, and that's been for ages. Bibi says back in the 70s, 50 years ago. I thought Chernobyl was year Chernobyl happened 86, April 26, 86. Yeesh. Okay. Richard says, sorry, it's not really the same. Richard says solar is way forward, but it still needs cleaning and maintenance. Yeah, absolutely. Yeah. I think I also heard a podcast that there's like huge areas where they have old solar panels because they wear out and stuff like that. Like it's solar panels are a lot cheaper. They're definitely being subsidized by the Chinese production, but yeah, like it's become a lot cheaper. So that is the way to go. I mean, otherwise we won't be able to breathe. Which is Mark says, "How old are you?" I'm 51. So to continue my previous train of thought, I've got 30, 40 years. I think the air is still going to be breathable. But if you got kids, you might consider making adjustments in your lifestyle if you want them to be able to breathe. Richard says, "Time for bed. Great night." Yeah, if you're still on, have a good night. Happy New Year to everyone. Um, so yeah, well, two people on. Okay. I mentioned I do this every second week, and the alternate week I do on TikTok, where I get way more people, which is actually not that much fun for me because I'm 30 minutes behind, and people leave by the time I get to their question, which sucks for everybody. So I'm much happier here. So ask, yeah, baby, yeah, pollution, yeah. Um, Tony's, yeah, hi Tony, happy New Year to you as well. It's interesting. I moved from just outside of Vancouver, from Surrey, British Columbia. I moved to Edmonton, and the air quality, and they switched from actually very recently they switched from some coal-fired electricity plants to natural gas. So, but still the air quality is significantly less good than it was in Vancouver. So we'll see if it continues to improve. But yeah, if you can't breathe, it's or you get like increased risk of cancer or whatever. You know, and obviously the global warming and or climate change. Bibi says, sorry to bring this back to AI, no problem, but I cannot see how fully functional AI in the real sense would ever be made available to the public. Um, yeah, I mean, it would be progressive, right? And I mean, reading as Isaac Asimov and so on, like it would need to have safety guards and so on. Like walking around fully functional, pretty much human robots. I think you got 60, 70, 80 years. Like I'm not a futurist. Like I don't know, anything past 30 or 40 years for me becomes real fuzzy. Um, yeah, I don't really see that. Um, I think I mean eventually, like just think of what you're probably watching this on. Like, just think about the power of it. Like the phone, I mean. Like you go back to the moon landing, like they did it on a fraction of what you got in your hand, and that was government only, right? Um, I don't know why, with proper safety and years of evolution, why you wouldn't have a full AI. I don't know. I don't know. Right? And then a robot kills a human. Well, we'll adjust all of them, reprogram, try not to have that happen. Try not to have that happen again. BB says if you would have an AI capable of writing correctly all the code of Google, Facebook, etc., would you make it available to anyone else? My guess is no. You would open company after company with zero cost. Well, you can open company after company today. It's just with cost. To make it about investing, Warren Buffett and actually Morningstar has the concept of an economic moat, where there's something that prevents um, competition from coming in, and it can be something like a brand name like Coca-Cola, Tesla, BMW, or it could be something physical like pipelines and railroads, where you're not going to get very many more created. That keeps competition out. They have something that nobody else can have. Um, but if you look at a mining company, even though it'll cost millions and millions to get another mine going, that is not like question of money is not a competitive moat. Taiwan Semiconductors, because of all the research and technology, that is an economic moat. But if it just comes to money, if you hire enough programmers to rewrite any piece of software, any website, um, like I would argue Facebook isn't all that sophisticated. And like you look at Reddit, like come on, like that. Other than the brand name, I you could write that no problem with a team of programmers in 6 months. Um, so yeah, I would argue the other way on AI being capable to reproduce Facebook or something. It's not. It's also not the quality of the code. It's the name Facebook or Meta or whatever the hell. Um, it's the brand name. So that's, like nobody's going to know about the software that you created. There's other search engines, Bing, that we know of, and there's others that people are using them. Anyways, this is just a discussion point. I don't feel that strongly about it. Baby says, not in a sense of it breaking out. I mean, people making the breakthrough would use it to full economic advantage. Yeah, for sure. Yeah, they would. But just because you have a product doesn't mean it gets brought up, like that it makes its way in the world. There's been plenty of products that have been better um, than what actually ended up surviving. I don't know why my mind went to it, but Betamax was better than VHS. For those of you who, Tony, yeah, no TikTok tonight. TikTok would have been on December 25th. Yeah, week ago. But I didn't do it then because it was Christmas. Um, the next TikTok is going to be in a week. I do these alternate. Um, I used to do TikTok every second week, and then just to get the YouTube channel going a little bit more, the alternate weeks I started doing YouTube. I wanted to do both at the same time, but just I get overwhelmed on TikTok just on its own, and I didn't also want to be doing YouTube. So Tony, next week, welcome though. Same brain as on TikTok, just way less people. Baby says, just to make sure it's clear, I am not in the camp of people believing AI software can break out and take over the world. Yeah, no, but in terms of like creating stuff, like, yeah, if I want to do an Excel formula, I could either Google it and then after flipping a couple of pages, I'll get there, or I could write a question for AI, and then it might find the right formula, it might not. Hi. Yeah. Okay. All right. Yeah. Okay. You're not the start. You're not the start. I'm not either. Um, I'm not like the Terminator movies of AI taking over the world or anything like that. Even though I think Elon watched that movie one too many times because he seemed to be really, what is it, the Singularity it's called? Okay, Tony says, any US stocks on your watch list for 2025? The last thing I bought was Google, and like almost immediately made like 10% on it. I think all of these, I, my big companies that I just want to hold for forever are still Microsoft, Amazon, and Google. I think they're all working on so many things. Um, and the fact that like that cloud is still growing at 30% a year over year for a couple of them. I heard that about a couple of them. I can't remember which ones, but the fact that that's still happening, um, and it's like 5 years later, like I find that very very interesting. I need to take that from her. So that would be the U.S. stock. Brain says, "What's your favorite long-term mutual fund?" I do have mutual funds. Don't yell at me for having mutual funds. Okay, give it to me. Give it to me. It's too small. Take this one. Hold on. I know people like there are mutual funds which you can research and they do better than the index, meaning better than the ETF. And when I say that there are mutual funds that do that, I get yelled at. So thanks, Brain, for that. Where are we? I like to use Mauer for the most part. They seem to have fairly decent. How's this one doing? Mauer is Mawer. The first three letters in the designation are MAW. They're do-it-yourselfers. They're out of Calgary, and they generally have really good performance. 2022 messed some of them up a little bit, no doubt. But prior to that and after that, they were all doing quite well. Okay, anytime. Okay. It takes ages to come up for some reason. The one I picked is global small cap. When it says global, a lot of it is developed markets. Okay, we'll go back. MAW 150. AW 150. How's that one doing? For me, mutual funds is just buy and hold. Like I don't have to look at them. Yeah, that one took, well, 2023, it came off. It's still outperforming other mutual funds. It's just, it's under the index. 102. I know this is exciting television. So this is international equity. I'm a big believer in international equity outside of, yeah, that one is definitely beating other mutual funds in the same category, and it's matching the index. Up until 2022, it was beating the index handily. So this is Mauer International Equity, and the ticker is MAW 102. Another one I have is I'm busy. It's a balanced. It's 105, tax effective balanced. Oh, and that one is has been beating the index the entire time. So this is MAW 105. Sorry. By the way, I don't do bonds. The only way I'll have bonds is when it's actively managed. So this is one of them. So yeah, pretty much any of these. Just check their star ratings and then check that they're beating the index. Because if they're not beating the index, you might as well buy the ETF. Note that they're beating the index after the fees are paid. That's how Morningstar shows it. So yeah, any of these three would be good. Maybe the international and then the tax effective. Let's say. Ow! Did you just bite me? She is very bitey. Like, pay attention to me. I'm like, no. So international equity 102 and tax effective balanced 105. Let's call those two favorites. Tony says, I'm buying SBSW, a commodity company, seems reasonable. Maybe I'm too early though. SBSW. I'm usually not much of a commodity person. I sort of make an exception for oil because I think it's still been underinvested as far as capacity. And I recently bought Nutrien, a little bit of Nutrien for SB. Where am I? SBSW, Stillwater something. Okay. Platinum Group Materials. Okay. Yeah. I mean, it's not profitable. Does it have sales? Sales. Well, actually, it had profits earlier, like in earlier years. Let's see how 2024 did. Oh, nothing. I only got yearly data. So only last year did it lose money. Prior to that, they were profitable. I try to avoid commodities. That's all. With the couple of exceptions that I mentioned. They've definitely come down. The problem is, do they have cash flow at least? Positive cash flow? Yeah, they do. Okay, so they're not going to go bankrupt. Positive cash flow is when they take away the sorry, when they add back in the depreciation and like other non-cash costs and expenses. So a company might not be profitable because they had a lot of depreciation expenses, but depreciation expenses aren't real that year, right? They're for tax purposes, amortizations and other. Um, so they do have positive cash flow. Yeah, I mean, they're sort of without a PE to sort of price to earnings ratio to balance things out. Like this thing could keep going down, and you never know how far. It wouldn't be my thing, Tony. Um, if you like it, buy a little bit now, a little bit later. If it keeps going down, he says. Tony says I'm buying, so that means you're still in the process. That's not bad. Would you consider Nike just a brand name and a fair value? Nike. My puppy's 6 months old. I'm very excited to have her. I finally got her going outside, and I built her a door, and that used to be a window pane. So I put in a piece of plywood and doggy door. So we're finally finally not being the doorman. But of course now she goes outside to bark, and I can't stop her, or not very easily. Okay, what's their PE? 23? Now that's interesting. Profit margin is 11%. I would have thought they'd have a much bigger margin. I mean, better than grocery stores, but anyways. So is it just a brand name, or like it's definitely come off. Like I would start if it goes down another $5. Why not? It's like other than COVID, like it's really at 5-year lows. Um, I think my shoes are Brooks. I think I'm more of a Brooks man. You bit me, jerk. Uh, always goes for the moneymaker. Anyways, Bibi says, how do you liquidate a mutual fund position? Do you have to call them up or something like that? You have to say pretty please to get your money back. No, the difference between a mutual fund is really that an ETF and a mutual fund is that the ETF trades during the day like a stock. So the stock exchange has to be open for you to get out of an ETF. Mutual fund, the price you get is whatever the closing prices of all the components are. So you usually before noon, depending on your time zone, usually before noon, you have to set up your sale, and then it sells overnight, depending on what the closing price of all the components is. Um, So yeah. There's a few other things like ETFs and stocks. You're obviously buying and selling with other traders, with other investors, while the mutual funds, the money goes to the mutual fund company, or the mutual fund company gives you your money back. So it's slightly more it's more controlled, but it's overnight. That's all. You have to set it up, otherwise they do it the following night. But usually the next day you have the money. I don't know if it's if it's only one day now to settle, whether mutual funds did the same thing as stocks. Um, Nike came down from 30% plus margin. Okay, so that's why. Like usually you would expect something that basically sells plastic, right? Like shoes aren't anything. It is the brand name that's making it. They just use a better glue than somebody else. Um, so yeah, I think that's why they're because margin is obviously for a retailer is a big, well, a retail product. Sorry, is a big thing. Uh, Apollo says Dogecoin. No crypto. Crypto is going to zero. It's completely worthless. Um, Tell me why Dogecoin is better than like one of the 10,000 that exist. Like somebody made it up as a joke. You guys just have no clue. It's hilarious. Like one day it's just all gonna get wiped out. Kyle says Nvidia to the moon. Well, I'm not gonna rehash the AI thing again, but I don't know. I don't know. It actually has to become useful. Bibby, looks like it's just you and me. I'm assuming it's you. You mentioned that you were part of an investing club. How do you go? Excuse me, there's a problem somewhere. Um, how do you go about finding such things? I just kind of was, I still am, but now virtually in Goose. I'm virtually in a Vancouver one, and when I moved to Edmonton, I just thought I would start one. So I posted on various Canada investing and Canadian investing and dividend and financial independence Facebook pages and stuff like that, and just said, hey, if you're in Edmonton, if you want to meet in person, we're actually meeting this Friday. Just hang out, like-minded people. Um, there isn't a list of clubs though. Like I did it the other way. I said I'm starting a club, and who wants to join, contact me. And then some people say, oh, I'll come, and then they don't, or they'll come once and then they don't. Uh, but yeah, if anybody in Edmonton is welcome. Brain says, why did you move from Vancouver to Edmonton? How do you find Edmonton on a map? So long story. Um, Tony, I'll get to you in a sec, okay? Bit of a long story. So we came to Vancouver in 1982, lived there my whole life in Surrey, which is a suburb. And go get it, lazy bones. Um, and I lived in a house with my ex. I lived there by myself after she moved out, then downsized to a condo. Hated the condo living, smelled cigarette smoke in my suite because somebody down the hall was smoking in their suite, and shockingly, uh, air and smoke travel. The Strata Council cleaned out the bike room and threw away my stuff, and I had to go to court to get paid for it. Um, and had people stomping on my head, waking me up at 1 o'clock in the morning because they slammed a drawer or dropped something. So didn't like the condo living anymore, and wanted a detached house, and didn't I didn't really like BC either. No offense. You got your earthquakes, you got your forest fires, you got your landslides. There was a flood that took out Abbotsford. I think the same year, the road and the rail was washed out. So basically, Vancouver was isolated by land for like 2 weeks before they rebuilt everything. Um, just didn't want to move somewhere in BC either. Didn't want to get a mortgage. So then I discovered I could sell my condo for 530 or something, and I could buy a beautiful detached younger house in Edmonton. Oh, in Edmonton for $100,000 less. I did. I mean, I was an IT analyst, so I did requirements. and I did cities, and then I did weightings for the requirements, how important they were, and then how each city scored, multiplied and added them. Whatever added to the highest number at the bottom was Edmonton, getting the highest score for the important stuff, and and uh, checked out prairies, all of that. Edmonton won. It was also the closest. What I didn't know was that, by the way, those of you who don't know me, my name's Alesh, which is unique, ALES, but it has an accent to make it a sh. By complete coincidence, I sort of knew it, but it didn't enter into my decision process. There was a hockey player in Edmonton named Alesh Hemsky. So people here know how to pronounce my name. um, and so, yes, bought this place in the winter, sold the condo in the spring, put my whole life into a 24-foot truck, which God help me, I made it in one piece, 1,200 kilometers. Bought stuff. A very nice home gym, home sauna. I need to replace some tile and see where there's a leak in the steam shower. There's three bedrooms, 4 bathrooms, huge amount of space, and ow, no, we're done. Thank you. Go get it. Sorry. Okay, I hope that was fascinating. So I did do an actual analysis, and I picked the city. So I moved because I needed to get out of a condo and didn't want to have a mortgage. Also, bad memories, frankly, in Vancouver. Everywhere I worked, I didn't like it, so that's why I had to quit work. So when I was going on bike trips around Vancouver, it's like, oh God, I hated working over here. And then 3 kilometers later, God, those people were a-holes. And just like, well, I think it was me. That's why I needed to quit working in IT. So fresh start, I guess, is another one. Beautiful house for 430 grand. The only thing is it's minus 20 right now outside. So, I went for a jog today. Didn't bother me. How did I go about finding such a thing? I bought the house remotely. Just interviewed a bunch of realtors. Found a realtor who was willing to do videos, and yeah, I'm super happy with the location. The only thing she didn't tell me about is that there's a fire station within hearing distance, but I don't know. I'm sort of getting, go get it. I threw it. Go get it. There's a fire station. Anyways, if you have more questions, I'm happy to answer. I don't think it's that fascinating, but Brain says, "Why did you move from Vancouver to Edmonton? How do you find Edmonton?" Summer was hot. Winter is super cold. Like, it seems to be real extremes. People here are super friendly. People are running their engines all the time, like just idling. I don't know whether to get into a warm truck or something like that. I still don't have a car. Yesterday I went grocery shopping by bicycle. Just keep clear of the ice. If I can, I get stuff delivered. Like, instead of going to Walmart for 30 pounds of dog food, I have it delivered for free, right? Same price. I'm sure it's built into the price, but it's same price. So yeah, lots of bike trails, which was one of my criteria, highly ranked criteria. Lots of bike trails. And where I am, it's quiet, other than the firehouse. I'm near a couple of major roads. It's all good. Kyle says he lives in Ohio. Well, that's nice. I am in Edmonton, Alberta, Canada since June. Tony says, what do you think about Nextracker, NXT? Tony's trained to give me both the name and the ticker. I'm much appreciated, Tony, from from TikTok, where Nextracker. See, if you just said NXT, there's Next Gen Digital Platforms Company as well. Nextracker is on the Nasdaq. So there's two tickers that are identical. So that's why I asked for both of them. So Nextracker, what do they do? Integrated solar tracker and software solution used utility scale and ground mounted distribution generation for solar. Okay, so it's a second way of playing solar, and they're in Fremont, California. Okay. No dividend, PE of 10, positive cash flow. So they're able to make a living at it. So good. And I mean it is the renewal. It's in a renewable sphere. Sales increasing. Yeah. What's wrong with them, Tony? Quarter over quarter, the last 3 quarters, the sales have been going down. Prior to that, year over year, it's increasing. I don't know. They like, even for a value investor, they seem reasonable. Like single digit PE, like I don't see an issue. Yeah. It's in the solar industry. I own some. I'm waiting to add some. Tough industry in the current environment. Yeah, I mean, China sort of has the solar panel making down. These guys look like they're adjacent to it. I don't know how much lower they would go, like they're in single digit PE. You could wait for a long time for it to go below 30. I don't know. I like a company that has earnings, profits, because that way you get a PE ratio, and a PE ratio can be used to sort of peg the price. Like, can it go to 8 PE? Can it go to 7? Sure, but like how much further, right? But if you have a company that has a PE of 65, well, their price could definitely could go down quite a bit. Okay. Jay says A. You don't say A. No, that's a stupid thing about Canadians. It's a stupid assumptions about Canadians. Brain says, "What's your outlook?" Goose, come. Goose, come here. All right, good come. Good girl. Yes. Can you be quiet? Daddy's talking. What's your outlook for 2025's S&P? Wouldn't be surprised down a bit considering 2024. Yeah, they've had a couple of good years in a row. And I mean, 2020, 2021 was as well. 2022, obviously, the double-digit loss. Yeah, I wouldn't be surprised if it was flat or even down. I'm with you on that one. I think it was J.P. Morgan who said that over the next 10 years, the U.S. markets are going to average like 3% or something like that. I know, that's why I have dividend payers. I'll get the dividends coming no matter what the share price is doing. So yeah, I'm with you, Brain. Nasdaq, of course, will be way more volatile than that. But yeah, I wouldn't be surprised if it was down. I think a bit of a break after some hefty run-ups. BB says the dog is a hoot. Well, Yeah. She doesn't want to go outside because it's cold to exercise. Goosey, baby. Hey, she's digging at the sofa. She's trying to bury a bone. Excuse me. Stop it. Oh, okay. Friggin' line in the background, yeah. Um, she slept earlier and now she's awake. The SKV says, "Hello, sir. Happy New Year. Happy New Year to you as well." Bibi says, "What's the main source of electricity where you live?" Yeah, I looked it up because of air quality, and up until recently, it was actually some coal-fired and natural gas. Um, Only like a month before I arrived in June, they switched to like everything became natural gas, which is, they're patting themselves on the back. I'm like, you're still burning something. It's just a lot cleaner than coal. So air quality compared to Vancouver is significantly worse, not to the point of coughing, but it's not great. Um, Edmonton is a small city, like a million people compared to anything else. It's pretty far north. Like it gets cold, so people don't love to live here. I don't think, which is why the house was inexpensive, and I like the cold. Um, okay. Cool. Anyway, so yeah, we're talking about nuclear. I don't think they're going to implement that anytime soon because it's an oil town. So anything related to oil will be it. I think people when they drive here or they keep their engines idling, I think they're actually think they're supporting the local economy. Um, uh, Brian's brain. I'm. Do you like Berkshire? Seems to outperform S&P 500. Might be okay next year. Yeah, they haven't outperformed it for a while though. That's the funny thing. They're sitting a lot in cash. I don't own it. No, BRKB. What? Not the A shares, not the ones that are 600,000 a share. Keeps out the riffraff. Uh, yeah, if you compare, if I look at, uh, uh, okay, that's not helping. I think they have just a lot of cash. That's all. Um, and Buffett's been sitting on it, and I would say, hey, like I know you want 20% return on investment, but why don't you find something that's going to get you 15 rather than collecting 3% and underperforming. It's um, it's been a while since they outperformed the S&P 500. That's all I about Berkshire. Um, I mean they're not going to be terrible. I mean they run companies, right? They're like S&P 500, except that they've been very carefully chosen. While the S&P 500, like there's some stinkers in there. Uh, like with all of these indexes, it's pretty common for the heavy lift to be done by just a few companies. I know the Magnificent Seven has been the latest, but but prior to that, my God. But prior to that, it's usually like a very small percentage of the index that actually does anything. Everything else is just flat or worse. Um, so Bibi says, "Do you actually feel the difference in air quality, or do you just read some test results?" Yeah, I just on the weather app on the phone. Just I just look. When I was doing my evaluation spreadsheet, Goose, here. Her toy fell in behind the sofa. It was all mad. um, when I was doing the evaluation, like it didn't seem that bad, but on the app, there's like there's a difference. I don't feel anything. I'm not coughing or anything. But then when there were the forest fires in Vancouver and like the whole place was all foggy, um, people were complaining, and I still didn't really feel anything. Tony says another commodity company maybe worth looking at is Vale, same ticker name. It's Brazilian, so there's geopolitical risk. I mean, Brazil will occasionally have issues, but it's not that they're going to nationalize everything, right? They've come off a lot. Interesting. Dividend is 92. Cash flow is, wow. Cash flow is like 4 times the dividend, and the dividend is 10%. PE is 4, according to. Okay. I mean, it looks cheap, but I mean, it could keep going down as well. Maybe the political risk is why it's so cheap. Yeah, there's no telling how low it'll go, though. That's the thing. Back during COVID, it looked like it was around maybe $7. That might be the bounce off point. If I can put my technical analysis hat on, which I'm not a huge believer in technical analysis, but sometimes support and resistance lines are interesting. Brain says, what's your top 3 favorite long-term dividend holds, TSX or US? So, good question. So, let me first preface this. Vast majority of my portfolio is in non-registered because I was incorporated for my business, so that had to be non-registered. And then because I was incorporated, I wasn't building up RSP room, so my RSP. Okay, I'm gonna help Her Highness. Excuse me. You are a pain. What's the problem? Here's your toy. Go get it. If I get her here, she's gonna bite me because she's so excited. Goose. Goosey, come here. Come on, babe. Hold on, I'll give her a bone. You're such a pain. That was for you. Goose, that was for you. Here. Sorry, babe. I got those rawhide bones and I threw it at her and I scared her. Now she's on the sofa. Anyways, top 3 favorites. So most of my stuff is non-registered. So because of taxation, you get your 15% withholding within non-registered. You get it back at tax time. But the dividends from foreign payers get taxed badly, like salary or interest. So for my U.S. exposure, I don't avoid dividend payers, but generally I don't go for dividend payers. So I think the only one that pays some sort of a significant dividend is Pfizer that I own, and that sucked. It it could pick up from here, but it's not my best stock. Um, wow, Ranges from Toronto. Okay, you're 2 hours, so you're after 11. Um, so I'll tell you my uh, long-term dividend holders, dividend payers from the TSX. Then Manulife is my biggest holding, and then I've got GSY Go Easy, which is kind of second tier lender slash payday lender slash leasing of appliances, kind of a bit of an icky business, but a very profitable one. So those have had a nice run up. I also have started buying that one a while back. So those would be the biggest ones, and then pick your favorite big five bank. I think Bank of Nova Scotia maybe is up there. I'm not on the same computer that has Quicken. But Bank of Nova Scotia, sort of, I'm hoping it's going to do the same thing as Manulife did, because it's had problems for so long, and I kept buying it, kept paying the dividend, and I really needed to turn around with the new CEO and after they got out of Central America and Caribbean. So let's say those are the top three. They're certainly the biggest market value holdings. US, it's probably Google that's my biggest position, but not a dividend payer. Like, again, for tax efficiency, right? So, Brain, I hope I answered that. Ranch, hi from Toronto. Tony says Rio Tinto is another mainly steel company that's cheap because of China's soft demand. Yeah, like China just didn't, after COVID, didn't come out of the blocks like everybody would have liked. It is what it is. China, I do own a few stocks. I know that's not what you're asking, Tony. I do own a few of the Chinese stocks. A couple of them are actually up. They recovered, but the one I plowed the most money into was Alibaba, and that one still sucks. But the problem I have with China now is that their population isn't growing anymore. The one-child policy has finally borne fruit. No, no pun intended. And so their population is decreasing, and that's not really what I'm looking for. I'm a big believer in demographics, but hopefully, despite that, they'll gonna start going, and they're not gonna compete with the U.S. in a negative way. Bibi says, so I don't think you wanted me to look up Rio Tinto. Like really oil, and then the little bit of Nutrien is sort of where I want to stop with commodities. Like I don't want gold producer. I just don't. Bibi says, do you think, I would have figured that out. Do you think brokers like Wealthsimple and Qtrade will cut deep into the big five profits? No. So I Qtrade and Wealthsimple and Interactive Brokers are my three brokerages. I started out with Qtrade. They charge like $8.75 a trade for regular people, while the big five banks seem to do $9.95. Me, because I have over 500,000 with them, charge me $6.95. But Qtrade has research, Desjardins and Morningstar, which I find super useful. Then you look at Wealthsimple, and it's like you might as well go to Yahoo Finance. Like they've got nothing. You get what you pay for. Interactive Brokers, they do charge something, not that much research, but they have data at least, so that's helpful. But like Wealthsimple, it's so bare bones. I like Wealthsimple for other reasons. I like that they're innovative. They have other products. Like that kind of stuff is cool. Um, like the private lending, the private equity. They've got a high interest savings account which I'm using. So like it's that's all good. Um, it's like each one has just a different niche and a different clientele. Like anybody who has significant money doesn't mind paying the trading fees with the big banks. If you got $1,000 to invest, then Wealthsimple is the way to go. Wealthsimple, by the way, just to pile on, they gave me like once I got over 500,000 with them, they gave me uh, like airport lounge passes, which were useful when I traveled last year. Most useful, which I'm already looking for in February, is they gave me access to a financial advisor who I didn't expect her to, but she didn't go over my portfolio individually, but she did a financial plan. And I said, I don't think I'm going to run out of money, but let's look at tax efficiency. When do I take old age security, CPP, all that stuff. So after we were all finished, I said, well, I'll talk to you in a year. And she didn't seem to like that. I'm like, you're supposed to redo the financial plan every year. So I don't know whether, or update the plan. So I don't know whether they think that it's once and done. You just use the financial advisor once, but I'm intending to do it once a year. I'm not gonna email her once a month, but once a year. I think that's sort of the standard. So I love stuff like that about Wealthsimple. As far as researching a stock, so I think they all target somebody else, basically, like different clientele. Obviously, some overlap, right? But anyways, Ranch says, sorry if I didn't get to. This is actually pretty good compared to my TikToks, where I'm 30 minutes behind. Thoughts on the 2025 market? Yeah, we've had a couple of good years following a fairly bad year, following a couple of very good years in 2020 and 2021. Um, yeah, I hate to be boring and say 7 to 9%, which is the average. That actually hardly ever happens. It's either plus 15 or minus 10. Um, if Trump's ego gets challenged and the whole tariff thing actually goes through and there's counter and so on, like that could really hurt the economy and hurt the stock market. So he's the wild card, I guess, which is scary. Yeah, she's working on her bone. So I would like it wouldn't shock me if it was a down year, because to have 3 really good years in a row would be a surprise. Um, that hardly ever happens historically. Well, it doesn't mean it won't, but yeah, I wouldn't be surprised if it was a losing one. I said earlier, J.P. Morgan said that the market's going to average 3% a year over the next 10 years. That seems low, but Ranch, sorry if I'm pronouncing that wrong. Heard very rare for 3 good S&P profitable. Okay, sorry, I promise I didn't read that. Profitable years in a row historically. Yep. Yeah. So we're on the same page there. That doesn't mean it won't happen though. Bibby says somehow assets under management of 50 billion and growing for Wealthsimple seems like it would have brought a lot of profit for the big five, and I like my dividends. Seems like it would have brought a lot of profit for the big five. But Wealthsimple is in, maybe I'm misunderstanding. Wealthsimple is independent, right? I think it's Power Corp that's running Wealthsimple. I own them. They gave Wealthsimple Power? Power. Oh, POW is the ticker. Let's see if it'll say. So I didn't think they were with one of the banks. Power Financial holds 55% in Wealthsimple. Yeah. Yeah, so it's Power. It's not, I don't think it's one of the big banks, if that's what you mean. And I like my dividends. I like my dividends too. Tony says, from your early days, have you ever tried to trade or invest in more speculative stocks? Yeah, arguably I'm still doing one now. What is it? Sunrise? Sunrise Residential? Hold on, I'll find them. They're a penny stock. One of the guys in the Vancouver investing mastermind group suggested it, and I got in. SRES, Sun Residential Real Estate. It's a baby REIT. They had one apartment building, and then they did nothing, and then they bought like 8 doors. Like they bought like a very small apartment building with 8 suites, and they're like, "Yay! Look, we're doing something." So I was expecting them to grow into like a real REIT with a bunch of buildings, and so far, like, it's been years. I owned them even before COVID, and they've done nothing. So I don't know whether the executives there are busy running the one building. The one building, I think, has like 200 doors, so that one, fair enough. But like, get more. So that one, I'm still waiting for them to grow up. Have I? So that would be the more speculative. Have I ever tried to trade? No. No, I through a guy who had a foolproof formula that I met on meetup.com. He taught us that if this line crosses that line. So I never did day trading, even though I learned about it. And I mean, I do some technical analysis and so on, but I don't actually buy and sell in the same day. Yeah, like, I mean, anything is arguably speculative. Like the Algonquin, I guess, is an example. Like that sucker looks like it's circling a drain. BCE is another example. They're not going to go bankrupt, so it takes a bit of courage to invest in them. It's not, and you're hoping that they'll recover. Otherwise, you're putting in good money after bad. So you could argue it's speculative, but I mean, they're profitable, and I'm expecting them to recover. But like, I don't do something that doesn't make a profit, doesn't have a positive cash flow. Oh, Nikola, which a friend talked me into. That was a beeping disaster. Friend talked me into it. I also learned about warrants. I didn't even get shares initially. I got warrants, and then I had to jump through a whole bunch of hoops and get the actual shares of a garbage company, a company that didn't even have sales. Like they just had a really charismatic CEO who I think ended up going to jail, and she might have been hungry, and they didn't even have sales. They just had a business plan, and they got caught where they had a truck that didn't have an engine that they pushed down the hill for their ad. The they didn't have anything, and that was total speculation. Never do that again, because the stock did nothing but go down. Another one, just because I'm up to date, I'll tell you. I've told this story on TikTok a few times. Um, it was a company in Israel years ago now, called Rewalk, like re and then walk, and they built like supportive exoskeletons for paraplegics, so they could walk again, hence the re. And I read about them, and as soon as they hit the stock market, I bought some, and it just went up, and I'm like, ooh, I'm gonna be rich. And then after a couple of quarters, it turned out all the smart money got out, so the stock started going down, and they actually didn't have much in sales, and they certainly didn't have much in profits. And from then on, it did nothing but go down. So I basically sold them off for a big loss, uh, capital loss, so I could write it off. But yeah, I don't do IPOs. Technically, that's not an IPO. It's a secondary market once it goes to the stock market. But I want to see a couple of quarters, and I want to see increasing sales, and I want to see profits, or at least positive cash flow. Like, never buy a rabbit in a bag first day of it being public. Um, and don't buy stuff that isn't profitable. So that's what I learned. So I did a few speculative things, and all of them got one of those. So I'm not going to keep doing that. I'm not stupid. Sure, if you're a gambler, occasionally it works out, just like occasionally you win at the craps table or whatever. Um, don't remember that one win and forget about all the losses. I'd, I'm not young anymore, but I still have time to let a company do its job, and I'd rather take 3-4% dividend and then some share appreciation and over time, and make money that way. None of the stuff that I have with maybe that Sun Residential, sorry. Sunrise is a um, uh, chicken factory or chicken farmer that my ex worked for, Sunrise Farms. She called them chicken killers, which they were. Um, okay. So those were speculative from Tony. I hope that was interesting, Tony. Learn from my experience. Don't do it. Don't do it. Um, Bibby says, yes, I mean the 50 billion from Wealthsimple would have been better exploited by the big five in terms of extracting fees. Oh yeah, well, I mean, the more competition, the better, right? I mean, you have some independents, Quest Trade, Q Trade, Interactive Brokers, which is worldwide, which is kind of cool if I wanted to buy something on some foreign exchange, like foreign stock exchange. I could. I'm not going to, but um, if you guys remember, for a while, the Chinese companies, because they were through ADRs, there was some talk that they were going to get delisted. It turns out that I could get those shares on the Hong Kong Stock Exchange through Interactive Brokers because I can trade there, which is kind of cool. Again, uh, I can't do research very well, so I'm not going to. So anything outside of US or Canada is going to be through a mutual fund or through an ETF. But it's kind of cool that I could. So there's a few independents. Wealthsimple, I guess, is the third one. Wealthsimple is Canada only. So is Q Trade and Quest Trade. Interactive Brokers is worldwide. Um, and then I think all the major banks have their own discount brokerage. So, okay, Rand says thoughts on Rivian, no profit, speculative as well. Yeah, I'm not gonna endear myself if you ask me about a growth stock. Like if listen, so there's a difference between speculation and a growth stock. Okay, if sales are increasing, if losses are getting smaller, or if profits are increasing, okay, even if there's no profits, if losses are getting smaller, let's say, I'm like, this is a growth stock, no problem. Okay, it's not my thing. It doesn't have a PE, or if it does, it's huge. But I can see that. Like Google and Microsoft and Amazon are in the 30s, 40s maybe. Like for tech stocks, fine. Okay. But if it's like Tesla at one point had 500 PE, like that's not a thing for me. That thing is a cult, both for the products, and they're not very good products, and for the stock, like the just yeah, yeah. Like I'm looking at Rivian. It's the thing is, it's trading entirely on sentiment. There's absolutely nothing to peg the price to. If tomorrow, if it jumped up from 13 to 20, great. If it fell down to 8, there's absolutely nothing stopping it. But if like, obviously completely different company, but with the big banks, like, the PE is going to be either in the very high single digits or in the low double digits, like 10, 11, 12, 13 kind of thing, right? So you sort of know what you're going to be getting in that range. But like with a company like this, like I don't need that. I don't need that. Like if you're a different kind of investor, you're younger, maybe more adventurous. I don't know, but like don't. Yeah, cash flow's negative. Like without additional cash infusions, like this thing is circling the drain, right? Um, so yeah, you're right, Ranj. It's not for me. Hey, listen, doesn't mean that you can't make money at it. Okay. The other thing is, it's my opinion. Uh, People sometimes doesn't feel like you're going to be doing it, but people will sometimes argue with me and stuff like that. You don't have to convince me. Like if you're trying to convince yourself, that's the wrong thing to do. You're getting a different opinion. It's your money. Take it or leave it. Um, you know, it's if you're only getting the opinion that's inside your head, which is, by the way, what I was saying earlier when I was talking about the financial advisor that I get access to from Wealthsimple. It's despite in being in two investing clubs, you can't bring your portfolio and say, "Hey guys, can we go through this stock by stock?" Like people are going to look at you funny, go through one or two, and then say, "Okay, we're done here." The financial advisor won't go through your stocks either, but at least you get another pair of eyes looking at it, another opinion, maybe how you're doing things. It's like, well, why are you doing only dividends, and why aren't you going for some capital gains as well, and so on. So it's good to get another opinion, is what I'm saying. Like, take it or leave it, totally up to you. Um, BB says Nikola did have a truck that worked with gravity. That's right. That's right. It was rolling downhill quite nicely. I don't know whether it had brakes, or whether it just stopped on the opposite slope or on the flat by itself. I don't know, but um, it was a bit of lights and smoke and mirrors. Um, but the thing is, like, they depended on, yeah, we're going to get there's going to be a hydrogen network. That's like, everybody's like, yeah, that sounds good. Yeah, hydrogen, the next few. And it's like later you learn, like, hydrogen. Yeah, like I'm an astronomy buff. Hydrogen is the most not I guess frequent, or whatever, like the most uh, the, there's in the universe, hydrogen is the highest population. Okay. But on Earth, abundant, thank you, Bibi. Um, it's going on 3 hours now, so Um, on Earth, you need a lot of energy in order to generate it. It's basically splitting water into hydrogen and oxygen. So it's not the go-to thing. Like if we had abundant energy, it could be, but then you would just use electricity for vehicles. You still may not use hydrogen. So like their trucks were going to use hydrogen between cities and then electricity within cities. And like they didn't have anything. They just basically had a hope and a dream. And me like an idiot because my friend that same friend before I taught him investing. Okay, I'm sort of I'm going to get to your Northland Power in a sec. That same friend, when I met him, uh, he had invested in one and only one thing, Blockbuster, right when it was tanking. Um, uh, they had no, like at the end, in the death throes, when they had no way of getting out of it, they had no plan to go online or anything like that. They were just going to do DVDs as long as they could. Um, and so he lost everything. Then I taught him about investing. He took that and started doing was it SPACs, special the Jesus Christ. Special Purpose Acquisition Company. I couldn't think of the P. Thanks, Bibby. You're a great wingman. Um, so he started doing those, which are complete speculation. You don't know what that company is going to buy, and they're sort of cheating the whole process of going public. And so he goes, you know, like this guy running this, he picks really good companies to bring into the SPAC. And then he's like, well, when I make some money, I sell it, and then I buy Amazon, Google, Microsoft. And I'm like, why don't you just invest? Because he was working in IT, he was making as much money as I was, or more actually. He was a project manager, or still is. Um, like, why don't you just buy those companies to begin with? And I asked him, did you make money on SPACs total? And he goes, I think so, which means he didn't, and he doesn't know, probably to this day. So he's totally gambling, and he was the one who recommended Nikola. And like the whole Warren thing, just it was like a total, hey, look over here. Like it I didn't really look at the company very well. And he's like, oh, and like all these great things they're going to do, but they were all things they were going to do. It was nothing that they did. Anything looking forward to me is just speculation. Anybody who says the forward PE on this stock or that stock, it's like, I want to see what they did. Like what they actually did, not what they're hoping to do, what they're guiding to do, what the CEO's what dream was. Like I want I want reality. Northland Power, okay. I've amassed quite the number of shares. The prices haven't done what I was hoping for, but so dividend is $1.20. Their cash flow is almost $4, so they can keep paying the dividend. Debt to equity is $1.76, which is high. Usually with utilities, it is that. So they're not profitable. Let me just check their financials. Like I believe these companies, I own a couple of them. Polaris, which is the geothermal one, is another one. Um, um, third one. Which one was it? Fortis is natural gas. EFN. No. There was a third. Algonquin no longer is renewables. They sold their thing. Oh, Emera. EMA is the third one that I own. So I think all of their time will come. Like I'm also investing in old school oil and pipelines, or I have invested. Yeah, year over year the sales are sort of hitting. Last 2 years the sales have come off a little bit. And last year in 2023 they lost money. Now on a quarterly basis, yeah, the last 3 quarters the sales have come off. And 2 out of the last 4 quarters were profitable. I think, yeah. It's not a company, you're not supposed to do this, but if you wouldn't buy the company today, which I probably wouldn't, then you're supposed to sell what you have. The fact that you have it shouldn't influence you. Analysts have a price target of 29. It's at 18, not even right now. Let's see what Morningstar thinks. Oh, both Morningstar and Desjardins have reports. So Morningstar says fair market value is $27. This was in August though. And Desjardins says 29. So I think it's underpriced. But yeah, theoretically I should be selling this. They're going to keep paying the dividend, which is really all that I'm looking for. I really don't want them to tank though. They're sort of at all-time, 5-year highs at least, 5-year lows, excuse me. So yeah, they're not doing well. Arguably, it's a chance to get in cheap, but not if it doesn't recover. Okay, scrolling back. So that was, so yeah, Brain Northland Power could look better. I'm sticking to it though, just like with BCE. Like as a value investor, this is sort of my bread and butter. If I was a growth investor, I would look for stuff that's going up and expect it to keep going up. Tony says, like right now, crazy bubble is in crypto and quantum stocks such as RGTI and so many others. Yeah, because quantum sort of became the latest buzzword. Quantum's been around for ages and they could never make it work. It sounded like there was something almost magical where it would take millions of years for something for a regular mainframe to run, and they did it in 15 minutes or something. I don't know. If it has to be practical and it has to be something you can sell, right? If they ran something that was specifically suited to a quantum computer and wasn't suited to regular computers, and they made that comparison, like let's do something practical and then let's see. So yeah, crypto I'm completely ignoring. That's going to zero. One of these days, whether the government or just people will stop believing in it, somebody will put it out of business. So yeah, Tony, I don't. I'm ignoring crypto, and until okay, I'm gonna type in one of them. I'm not gonna look up. Like it's fun. I said this earlier. There's companies where you look at their description and you can just see chronologically as they're hitting all of the new buzzwords as they happened over time. So Bitcoin mining, metaverse, quantum computing or whatever. Like these companies just jump on the latest bandwagon. Okay, so the fact that they have quantum. Okay, so let's look at their sales. So yeah, they shot up. Just any, I don't do stuff like that. Like anything that goes up that quickly. They do have sales of some kind. I don't know what those sales are. Unless they're selling quantum computers that actually work and they're still losing money. So like if whatever they're doing is so freaking magical, so star spangled awesome, why are they not making money at it? Like and they have selling and administrative expenses that are 6 times their sales. Like what is happening? Like whatever it is they're doing, it's not working, right? So, and people are jumping in on speculation. Now, if you jump in early enough, you'll make a lot of money, just like you could on meme stocks. But eventually, somebody at the end, when somebody says, "Hey, this thing actually doesn't work," you're left holding the bag. Anyway. Yeah, Bibi, yeah, my friend, when he says, I think so, is the universal signal for no. He was just trying to make himself feel good, right? It just had, or he had no idea. So, Brain, Emira is EMA on TSX. Actually, it's done better than Northland. PE of 24, yield 5.4%. Dividend is $2.90, and their cash flow is $7.70. So their cash flow covers the dividend handily. Return on equity is 9. I'd prefer higher, but it's not really that kind of industry. Renewable energy, Florida Electric Utility, Canadian Electric Utilities, gas utilities, infrastructure, and other. Mexico Gas Company, Seacoast Gas Transmission, Pipeline. I should find out exactly what they do since I own them and everything. That's the problem with owning 60 stocks and like 20 mutual funds and ETFs is sometimes you lose the details. Okay, Ranch says CNQ has not cracked 55 per share. Now I'm going to be looking on the TSX. Yeah, it's dependent entirely on the price of oil, and as oil has sort of been coming off, it's come off as well. That's the thing I don't like about commodity companies in general is that they're price takers. Whatever somebody's getting out of the ground here is going to be sold for the same price as what the next guy's getting out of the ground over there. So they're basically competing on low cost of being able to do it cheaply. But commodity companies can never ever have any kind of an economic moat. There's nothing that's differentiating them from the guy down the road. Price of oil, well, it's over 70, 71. I think it's WTI, I want to say that it's showing. But anything over 30 a barrel is going to make Canadian companies profitable. Their share price is going to come down as the price of oil comes down, as we've seen. The yield is 4.7. Payout ratio is 58, which is all good with me. PE is 12. Like it's a perfect value stock for me. Okay, Bibi says I need to get an account with Qtrade. Seeing the sales and exact profit numbers is a real bonus. I think you can find that on Yahoo Finance as well. If you dig around, depending on what brokerage, you might find it as well. But Yahoo Finance has it, I'm sure. Baby says, can we invent a new buzzword here tonight? I vote for quantum blockchain AI. Yeah. Tony, if you're still on, have a good night, my friend. Al Sir says, what do you think about the new Trump tariffs on Canada? If it actually gets implemented, it's gonna affect us heavily. It's definitely going to impact the US consumers as well. It's going to cause inflation in the US. Our GDP is going to take a hit if it actually gets implemented, and if you get, counter tariffs, etc. Um, Knowing Trump as I don't all that much, this could be just just a way to try and negotiate something again. He's all about the deal. That's all he cares about is getting a deal. He doesn't care about running the country, the U.S. or anything. He wants to get a good deal for. Um, he wants to be the one who renegotiated and got the best deal. Okay, and then he wants to make himself and his friends richer. Um, so he could very well just be trying to scare everybody and rattling his saber, as the saying goes. And it's a negotiation tactic. If he doesn't know that it's going to hurt Americans, it's going to cause inflation in the U.S., and that it's the U.S. companies that are importing the goods that are actually paying the tariffs, and that they're going to pass it on. What will happen is that the Canadian goods or Chinese goods or whoever are basically not going to get imported, so it's going to be um, onshoring, but the Americans and Canadians won't work for the same pay as Chinese or wherever else the goods are coming from. Um, Sorry, Americans won't work for those prices. So anything that's being made in America is going to be more expensive, causing inflation. He also doesn't like interest rates to go up, which if there's inflation, central bank, assuming he doesn't somehow get his fingers in there, which he should not, absolutely. Central banks need to be independent. They are not a tool of the politicians. Politicians have different goals than the central bank. Politicians want to make themselves rich and get reelected. Central banks want to keep inflation in check and keep unemployment as low as possible, I guess. Um, so so as long as Trump isn't able to affect the central bank, then when the central bank sees inflation, they're going to raise interest rates, and Trump hates that. So maybe somebody will tell him that this domino effect can be stopped if he just forgets about the tariffs. There's so many things that are said on campaign trail by all politicians, to be fair, that it could be a complete nothing and he's forgotten about it already. Like who knows? Who knows? Okay. Okay, yeah, Bibby. Good night, sir. Mike says, hi. If I bought HYLD covered call for 10 and the bank later on, okay, hold on. If I bought HYLD covered call for 10 and the bank later on had adjusted cost of $9.50, if I sell, do I get $10 original cost or the adjusted cost from the bank at $9.50? I don't understand what the adjusted cost is. HYLD is just a covered call. It's not. Is it American? No, it's on the TSX. It's. I don't understand if you bought it for 10, that's your cost. I don't understand how it would have gone to adjusted cost to 9.50. Like, what happened to the 50 cents? Um, to be honest, phoning your brokerage will probably get you a for sure answer. I can't think of anything unless you can tell me what the 50 cents, where that went or what happened to it. I've had stuff where I was paying for Canadian dollars, where I was paying with Canadian dollars um, for US traded stock. So I had to convert the brokerage converted the Canadian dollars to US, and I um, just finished my story. And the brokerage charged like 2%. So I thought I was paying $100, or the share price was $100 US, and um, suddenly the worth was 98, and that was also my cost base, but that was because of the currency conversion. So you're saying Hamilton covered call, yeah, but it's in Canadian. So my theory is our bank lowered the 10 to return on capital, return of capital. So somewhere they gave you 50 cents back. So you would have gotten some sort of a special dividend. Does it pay a special dividend? That's return of capital. It's ROC, return of capital. Just if you're gonna ask them. Like the yield is 12%, so maybe part of it is that they're okay. So if it is return of capital, the problem is they're giving you some of your own money back. Okay. So that means they cannot pay the 12% just from the covered call income. So they're hollowing out the ETF by giving you some of your own money back. They're marking it as such, and they're saying that as a result, you only paid $9.50 for a share. So if you sell it, you get whatever the market price is, and then you pay capital gains on the difference between what you sold it at, which is always going to be market price, right? And the $9.50. So by giving you your own money back, you're going to pay higher taxes later. Now they did actually give you your money back, so you basically got those shares for $9.50. They did give you your money when they're paying you that 12% yield. The problem is, and I'm on the Qtrade brokerage, when I look at it, I can't see it. It doesn't have a management expense ratio. Let's see if I click on them. HYLD, let's see what the MER is. Everybody just sees the 12% yield, by the way, and that oh, it's zero. Oh, but it's subject to the fees of the underlying ETFs. Yeah, Mike, the point I was making was that even though they gave you some of your own money back, you are still being charged fees on kind of what the market value is. So even though they're sort of hollowing out the fund, they're still charging you fees on the full amount. That's sort of what I'm getting at. It's probably not hugely significant in this case. There's other ETFs that do it worse, but it's yeah. No, I know you didn't sell. I get that. It's just that your cost basis came down. Yeah, yeah. So $10 is here. Let's say it goes up to here. Okay. What they did is they gave you 50 cents somewhere, and the price came down to here. So if and when you sell it, you're going to pay capital gains on this whole amount. So, but you got your money backs theoretically, anyways. Maybe you can't see it separately. I don't know. Um, I since we're on the topic, Mike, I'm not a huge fan of covered call ETFs. Um, they will generally underperform like a regular ETF that does not have the covered call overlay by like 1 or 2% a year over a longer period of time. There can be a year or whatever when the market is flat or down, where this thing will do better than the market overall. It's just over a longer period of time with the covered calls. So stock prices here, they have a contract, right? Will the covered call ever go to zero? No, it's not. No, that's not how it works. So quick options. The covered call is an option. So share prices here, they they sell for money, for cash right up front. They sell a promise to sell a stock that is within the ETF at this price. It's called a strike price. Okay, this is the covered call. It's an option, it's a contract, it's a promise. They collected money right up front and then they're giving it to you. That's where you're getting the 12%. It's not the underlying stocks that are yielding that much. It's the covered calls. And if the stock stays down here, then this will expire worthless. Depending, it all has a time frame. It could be 1 day or it could be 2 years. It expires worthless, and the person who bought it is not happy. The ETF is happy. But if the stock goes up, they have to give up that stock and they have to give up at this price. So the ETF and therefore you miss out on this. Okay. And if we're assuming an upward trending market, it will keep missing out on stuff. So during a flat market or a down market, you get an extra 12%. So it offsets the down market. So if you know that that's happening, great. But overall, and over a long period of time, the market goes up. So you're always missing out on some. So it's only been around for a year. No, a couple of years, 2.5. Yeah, so basically, Mike, I kind of suggest if you absolutely hate selling a couple of shares here and there to get some money coming in, and you don't want to dig into your principal, at least psychologically, because it all works out the same. Then something like this can be fine. But it would be better to hold just a regular ETF without the yeah, you're welcome. It would be better to hold the a regular ETF without the covered call overlay, and then just sell a couple of shares here and there. That's just what the math does. Like I've done a YouTube video on it, and I did it on a live session where somebody was doing a covered call ETF that was running on top of a NASDAQ 100. So we were able to get just the NASDAQ 100 index, and then the covered call ETF. and it missed out by a couple of percentage points per year for total return, right? But if you really hate your job and you have a half a million, you can buy one of these things. It'll kick off 10, 12%. Some of them are more. And then you're like, I can live on 50 grand a year and I don't have to go to work again. So then that's what people do with covered call ETFs. As long as you're aware of it, you know, make your decision. But anyways, got one person on. Not sure if that's still Mike or somebody else, but if you have any questions, I've been at it for over 3 hours. The dog hasn't fallen asleep yet. So yeah, if you have any last questions, personal finance, Canadian investing, I can look up a stock or two. If you want to know about how to achieve financial independence, I was able to quit my job 5 years ago, and every time I go for a jog during the day on a weekday, I'm still grateful. Ask away. I can. It's actually very simple how to do it. You just spend less than you make, invest the difference. How much you're investing is up to you. How badly you want to get to wherever you're going to be going. So it's not difficult. You just have to stick to it, and I think a lot of people don't. They always get that shiny something in their eye that they want to buy, whether it's a vacation or God help me, a car. So, all right. I do this again. So next week, next Wednesday, starting 6 Pacific, 9 Eastern. I do this on TikTok, and then in 2 weeks I'll be back on YouTube, hopefully. We'll see if anything interesting happens with TikTok in the meantime. Any questions? I'm not going to get any more entertaining than this. I'm not going to start telling you my life story if nobody asks. So we're going to call it a night then. All right. Well, hope somebody got some good value out of it. And I will see everybody on YouTube in a couple of weeks. Bye.